As you may see, we are actually just in the face of the denial. Markets are just chugging along almost 19,650. Which side of the camp are you? Are you getting into a frothy zone now, or are you on the camp that the rally may not stall in a hurry this time? And even if it does, the correction would be much more shallower because they come on strong fundamental factors.
Yeah, hi Ajay. Good evening to you and good evening to all the viewers. Thank you for having me on the show. Always a pleasure. So Ajay, yes, markets have been going up against most of the people's expectations, but I'm sure it's a pleasant surprise for everyone. The quarter that just got over. I mean, in fact, this current financial year itself. I think April till July now. I think who would have thought at the end of March, early April that markets would give this kind of returns, because today I think Nifty is already up 10 to 12% in this financial year, and the mid cap and the small cap indices will be up more than 20%. So clearly, it's a surprise, but I would like to believe it's a pleasant surprise for all of us who have been into equity markets, and we are very happy to see this strong rebound, I would say. In terms of, I think, the underlying factors, clearly we all understand the kind of the outlook that we all have for Indian economy. A lot of high frequency indicators also at this point in time are showing decent signs, whether it is the freight volumes, whether it is the e-way bills, whether it is some of the other data points in terms of your maybe some of the auto volumes, right? So all of that seems to be fairly decent. But I think the only challenge probably at this point in time is the valuations, right? So in terms of valuations, maybe market is maybe slightly running ahead of time, and that could be the only concern, if at all anything. I think other than that, if you think about it, the quarterly results, particularly the Q4 results, were very, very decent results, much better than anybody would have expected. I think the trend for the Q1 will also be decent, and the capex cycle seems to be very strong. Companies after company, when we meet them, when we hear the earnings call, when we see their press releases, clearly the order books over there are very, very strong. So I think we are on a very, very strong wicket as far as the ground reality is concerned, particularly on the capex cycle, on the manufacturing side. So that is giving a lot of confidence that if I have to take a next 24 to 36 months perspective, I think we should be fine.
Which is the most attractive part of the market in your view on valuations and earning prospect kind of matrix, Sachin?
We believe that some of these large private sector banks, we believe the valuations even at this point in time are fairly reasonable. They are very, very strong franchises. And if you think about it, the large private sector banks in the last 3 to 4 months haven't outperformed. They have just about kind of been in line or maybe marginally underperformed the markets. So we feel that there is some value out there. Some of the large pharma businesses, particularly in the CRAM space, the contract research and the manufacturing space, the CDMO space, I think over there also the valuations are fairly reasonable even at this point in time. And the business outlook over there, if I have to take next 2, 3, 4, 5 years, structurally we are in a very, very strong wicket, because the global outsourcing for these products, be it pharmaceuticals, be it chemicals, is on an upswing, and we believe that will continue for the next at least 3 to 5 years.
Sachin, you are managing two portfolios, right? One mid cap, small cap tilted, one large cap. I want to understand how's the valuation multiple right now on a blended basis of your portfolios versus the earnings they're posting. Just for an indication purpose, how's the valuation mood of your portfolios?
So clearly at this point in time, the mid caps and the small caps are running a little much ahead, I would like to believe so. There clearly there are a lot of companies where we have invested over the last 3 to 4 5 years. A lot of companies, we are reaching our target prices, and valuations are a bit stretched over there. Compared to a lot of large cap companies in the similar sectors, we feel there is much better value and probably better margin of safety also at this point in time from a valuation perspective. So mid caps and small caps valuations are a bit overstretched at this point in time for sure.
Do you see a case for a kind of a structural move next 2 to 3 years, because of course, unless there's some major kind of accident happens globally, but macros are suggesting that reasonable growth and of the economy and reasonable growth of corporate India will actually continue. And if that indeed continues, barring seasonality in the flows, there may not be a major case for a crash in the market.
So, there are two classic things about equities, right? First, they'll always go up in the long term, and second, they'll always go up and down both in the short to medium term. So, the inherent, the volatility is the inherent DNA of equities. I don't think we can ever rule that out. So, to say that there will be no volatility in the next over the next 2 to 3 years, I think it's too much to expect. So I think we should be prepared for some kind of volatility over the next few quarters, because that's the inherent nature of equities and markets, and that's where actually the opportunities get created for long-term investors like us. So and that volatility, it can actually go extreme on both the sides, right? It can go into euphoria, frenzy kind of thing, and it can also get very depressing. And both the sides, you have an opportunity for long-term investors like us. So I don't think we have to run away from that volatility, but we have to prepare ourselves, do our homework, and capitalize on that volatility.
All right, Sachin, we'll let you go on that one. Thanks so much for your time.
Thank you.
That was Sachin Shah of MK Portfolio Management PMS. Time